Good afternoon. In this video, we're going to go over this past week's trades in the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. I did finish the week with 27 wins, 2 losses for a win rate of 93.10% for the week. That is really good. I tried to target 80% is a weekly goal, but the last few weeks I've been going over 90, so it's been a very good week. So hoping to continue this streak, because I think the last 2 or 3 weeks I've gone over 90%, and before that it's been like 80-85. So overall I've been like above 85. So if I can get over 85 for the year, I'll be very pleased. So yeah, with that said, you can go on Twitter and you can see the timestamps. On Monday the 13th, Trade Ideas Room said SPY calls for 382. Let's get over to Monday, which is right here. Now Monday, I believe, was the day that I was expecting a dead cat bounce, a rally day, because of going into FOMC on Wednesday, and the put to call ratio was very high at this particular time. So I was expecting at least a day rally Monday or Tuesday. So we didn't really get it. We just got more kind of like grind down days, I guess you could say. We had a little bit of a bounce right here, but anyways, I'm getting a little ahead of myself. But no, we didn't have the rally day that I was expecting on Monday or Tuesday to cool off the put to call ratio before FOMC. So we'll talk about more about FOMC and the put to call ratio on Wednesday when we get to the Wednesday trades. But so it did not get over 379. Well, technically it did. I mean, SPY calls over 379. Oh no, sorry, wrong day. 382. 382. Okay, that is this level right here. You see pre-market high here and here. Just make sure that everything's taping okay. Yeah, get pre-market high here and here. That's why I used that level. It came up and almost touched it. Then it faded, rejected, and because it rejected and came back down, I've been, not always, but 90% of the time I'm going to wait out the first 10 minutes candle because of the fake out. Because if you actually went and played this, you would have got trapped and you would have took a loss right there. The first 10-minute candle on SPY is usually a fake out. And sometimes you have double fake outs where you'll have, like for instance, it will go to make it look like it's going to pop, then it will drop down, then it's going to make it look like it's going to drop, then it'll pop back up. They'll do a double fake out like it kind of did right here before it actually makes its move. But I did grab puts right here because when it dropped down, it opened up right here and it probably popped a little bit there and then it finally came down. So I grabbed 380 puts at 940 at 298, which is in this candle right here. So I bought it up here, and they went from 398 to 560 if you held all the way through. Then I bought calls at, I bought SPY 375 calls at 1102, which is right here in this candle. I think I probably bought it close up to here because I bought them at 280 and then I ended up adding more at 240. So yeah, I got it right here thinking we were gonna pop. Then it dropped a little more, so I averaged down, making my average to 260. And so they went from let's see, 260 to 260 to 490 in that little pop right here. Now I did take puts at, let's see, 1123, which is right here. Now I took it here because of VWAP and the 20 EMA. As you can see right here, you can't really see VWAP. VWAP is this white dashed line right here. And when VWAP and the 20 EMA come together, there is such a huge high probability that it's going to reject. It very ever rarely goes through on the first try when they're together. If they're separated, yeah, they can go through, and VWAP will probably end up being more the stronger magnetic pull. But because they're together, they act as real strong resistance, and I caught the little pullback on that. So I got the 378 puts at 225, and they went from 225 to 275 in that little drop right there. So you can almost count on, when they come together like that, they'll probably more than likely reject, and that's why I took it right there. Then I ended up taking SPX puts at this time at 1154, which is right here. As you can see, popped the VWAP. Well, when it dropped, then it popped through, and kind of rejected. So when it came back up, I grabbed it. I grabbed the 3740 puts at 610, which is I got right here. Then it popped up, kept going and going. I added more at 320, then I added more at 330, bringing my average down to 415. I don't think I really had that big of a position. And this pop right here, I ended up taking it for a loss. I dumped it at 2, so then after I dumped it, yeah, it drops, and I kind of annoyed with that. But it did go against me. What I was doing was, see, this is where it broke down right here. It likes to come back and retest it. It kind of retested it right here, the breakdown area right here. That's where it rejected, and I took it right here thinking it would come back down the lower day, and it just chopped and popped, and I kept averaging down. Then I finally just said, okay. When I got back to higher day, I took the loss. I should have just stayed with it, and thinking it was going to reject this higher day. But sometimes SPY just can go really stupid, and it hasn't gone stupid in a long time. It hasn't gone stupid in a while. So I actually kind of thought that it was going to go stupid because of the put to call ratios were so high that this could have been the day that it could have gone to 384, 386, or even higher, but it didn't. It rejected, and they did end up going green, I believe. I'm not 100% sure, but I did take puts again, but I took them at the 37.70, not because before the ones that took a loss on the 37.40, I got closer to the money. I got them at 37.70 at 12.40, which is right here in this. Right when this candle formed, this big red candle, this is when I grabbed the 37.70 puts at 535, and they went from 535 to 1460 in that little drop right there. So that was a nice play. And then I took puts again at 211, which is right 211 right here. You can see it had this big green candle, then it rejected the green candle. Then when it came through VWAP, this is where I ended up grabbing it. I got the 37.50 puts at $5, and they went from $5 to $6.40 in this little move right here. Then the last play of the day, I took calls at 318. 318, which is right here. Okay, this is 318. Yeah, okay, I got it right in here. I probably got it closer to down here. And you got that little pop right there. So yeah, I had the 37.85 calls at 390, and they went from 390 to 540 in that little push right here. So I think I got them closer to down here. And when you get into the end of the day on expiration day with these SPX, they don't need to really move much, because if you're at the money or even close to at the money, A 10-cent move could end up sending these things $1, so 50 cents to $1. So these small moves, when you're at the money, can send them quite a bit on SPX expiration day. That's why I love trading it. You can, if you catch it right and time it right, you can do really well with it. So I only had one loss for Monday. On Tuesday, didn't trade much on Tuesday. Tuesday, SPY again. Let's see, blow it up just a little bit. Trade ideas room on Tuesday. I said, what, SPY calls over 379. Now I'm still expecting the put to call ratio to cool off. Is still pretty high. You got FOMC the next day. This is Tuesday. So I did grab 380 calls at 955, which is in this candle right here. As soon as it came up, now the trade ideas room was about 379. 379 level is right here. You can see the this high right here, and you get this high. I mean, you could have gone with this high too. It doesn't really matter. 378.50ish you could have gone with, but it didn't. It dropped, and when it came back down and it came back up and broke this candle right here, this is what I was looking at. Now, even though I was looking, you could have gone with this level, the 377.55 or the 378, but because it drops at open, I readjust the levels to right here, because this is the opening candle. This one right here, 377 is the high, or close to the high of this candle. So when it dropped down, it came back up and broke over this candle. I always readjust the levels based on the first 10-minute candle. And if you're in the room and you know me, you know this, and I always go over this every recap video, that I do readjust that. And the reason I readjust it is if it comes back down here and it does come back up to this area, look, it would have been a fake out. But if you grab it right here on the opening candle and catch that, which I did, the 380 calls at 340, you get a little bit of a play. They went from 340 to 381. SPY calls was a SPY doesn't expire 5 days a week like SPX, so this was a non-expiration day on SPY, and so they were a little bit expensive, but even SPX was like $20, $25 at the money on this early in the day. So so yeah, they went from 340 to 381, and so that was a nice little play. You got to always anticipate that when you have a level and it does, if you're thinking calls and it does drop, you got to readjust the levels right there. That's what I always do. So you got to anticipate that, and if you're not sure, just ask in the room. The next trade was let's see, 12.32, which is right. No, I thought for sure it would have been right there. VWAP right here, 12.32, right here. I should have. I don't know why I didn't take it here or here. Probably because I thought that it was gonna pop and cool out the put to call ratios, because that's pretty much the theme. The thing I've been waiting for and looking for Monday and Tuesday, and it just did not. SPY just kept getting crapped on every time it popped. So you could have got a VWAP rejection right there and there, but no, I grabbed it down here. I grabbed the 37.15 puts to 750, and it went from 750 to 975. So a nice $2 move up. You got to take that $2 moves, especially if you're up, because SPY could go the other way, and SPX could take a 50% hit in a matter of seconds. So you gotta be fast, you gotta be calculated, and you gotta be ready to get in and out. So then I took SPY puts again at 125, which is right here. As you can see, it popped back up through VWAP, and it started to look like it was going to go. Then it quickly got rejected when it came through VWAP. This is where I grabbed it, the 37.40 puts at 750, and then they went from 750 to 21.30 if you held all the way through. So that was a nice little play there. Kind of choppy here and there, but I mean, if you can time SPX and play the chop, I mean, you can make some good money in the chop. So think one of the days this week I played chop. I think it was Friday, but I'll get to that when we get to that. Now on FOMC day, I didn't trade until FOMC. Sometimes, I used to in the past take a couple trades here and there, but before FOMC, but it's been so usually choppy that it's not been worth it. And I've been sitting out the last few FOMCs, and they've actually had some volatility. So maybe next time we have FOMC, maybe I won't wait for it. I'll just trade it because we got some good trades we could have taken here. We could have taken it here. We could have taken the VWAP rejection here. And I decided to ignore everything and just, in case it was choppy, and just wait for FOMC, which, wasn't a bad idea either. But anyway, so even though I was not planning on playing till FOMC, I did put in the trade ideas. Room SPY puts under 375. Which is 375 is down here. Get a round down for a nice round number, and it never came back down, so I dropped and popped back up. So, but for FOMC, it was so expensive. SPY was so expensive. I had to go with a pretty nasty spread. I didn't like going with the spread I had. I mean, I've gone a lot worse. But I went with 3,700 puts at, let's see, 3,900 puts, no, 3,700 puts at 890. Then I went with 3,850 calls at 630. Now, the calls went from 630 to 1270, and the puts went from 1480, went from 890 to 1480. So, one of the things I was leaning towards, I said in the room, because we didn't have that FOMC run up, or we didn't have that ridiculous day to cool off the put to call ratio, that I was leaning more towards a pop than anything. But because the last few FOMCs, they've been bad, and even though they've been bad and they haven't been good, they're not bullish whatsoever, that the market has popped on it, and the next day it sells off. The next couple of days it sells off. That's what the theme's been for the last few FOMCs. It will have a fake drop, then it will pop, and then on Friday and the week after, it just ends up dropping. So that's what's been happening, and that's actually what happened on on Friday. So, and when FOMC, the FOMC is kind of tricky to play. If you don't know what you're doing, you need to kind of watch what I'm doing. Because FOMC, you get multiple plays. You have the first play, which is the FOMC statement. Then you have Powell speaking. Then you usually have an end of the day move too. So you have anywhere from 2 to 3, even 4 moves based on the statement, Powell, and the actual end of the day action. So now, when it comes to the actual opening statement, when you have the strangle, that the first move is usually the wrong one. As you can see right here, right at 2 o'clock, it popped. So when the first move happens, it usually happens really fast, within a minute or two. What I do is I have both options up. I have them both ready to go, and the one that pops is the one I sell first. So in this particular case, it popped up first, so I sold the calls first. So I popped up, I sold the calls, then I held on to the puts, then it dropped, and then I sold the puts. So that's how you end up playing it, because the first move is usually the wrong one. If it pops up, it's going to usually end up dropping. Now, if it dumped first, it's going to usually end up popping. So the first 10-minute candle is the one that's really the one you have to play, and you have to take it, especially if you're up 100% on one side. Even if the first action is to pop, if the first move is pop, you don't have to wait 100%. I mean, if it's say you got 890 like I did, and you get it over $10, $11, $12. I think I was selling at $11 and so. I think it even sold some at 12. That's a good play. You're up over 50%. So then because the point is that you want to sell into the strength of the side that's going to end up being a fake out. Now, grant you that sometimes it doesn't always do a pop and drop or a drop and pop. Sometimes it just makes the run on the first move. It's just the actual run and never looks back. And sometimes that does happen. It's kind of rare. It doesn't happen too often. Usually it's the fake out move than the actual move instead of just going straight up or straight down. But that's why you need to sell on the first pop. Then when it starts dropping, you sell when it starts dropping. So yeah, 890 to 1480 and 630 to 1270. No reason not to have a good play on that. Then I ended up taking puts at 211. As you can see right here, 211 it popped back up. As you can see, it popped and it dropped, and when it came back up to come up to the flat level, up to VWAP, I did grab 3,700 puts this time at $9, and they dropped, and they went from 210. No, right here. Excuse me. I didn't get in this candle. I got in this candle. I probably got it right down in here. The only thing I'm kind of curious about is that they went from 9 to 1090 in this drop. I must have got it down here. Actually, hold on, let me think. 10 to 11, which is this candle. I probably got it right here. That's 375.50 area is probably where I got it. So they went from 9 to 1090. Not quite sure why I didn't get it down here, but I did grab puts again at 1020 at 1036. Oh, not 1036, sorry, 236. 236. Let's say 236, which was this candle. No, up here. Not quite sure what I did, because this started at 1440. This is the candle. I probably bought it. I think I actually got it down here, thinking we were going to crash. We were going to dump. But yeah, I got the 37 puts again, 100 puts again at 1020. And I didn't get them that big. I remember I only had a couple because I chased this massive move. And I just wanted some just in case. And they ended up, I think it popped on me like instantly after I bought it, and it just ended up going to zero. But I didn't have hardly any position whatsoever because I chased the move, and I didn't want to take a huge loss, so I just went small. But I did grab puts again at 257. You know, I didn't want to buy calls because every time you had a green candle, there was massive dumping. So green dump, then you had this big nasty green candles right here, and then it dumped here, then another one that dumped, and it seemed like that every time it popped, it got hammered on shortly after. So instead of me trying to buy the calls, and plus you had to buy so far of them, and the volatility was really, really crazy. So I did grab 3740 puts at 257, which is right in this candle when it started coming down. No, not this candle. 250. Yeah, it was this candle. I probably got it right when it started coming down in through here. As soon as it probably turned red, I started grabbing it. So I had the let's see, 3740 puts at 550, and they went from 550 to 820. So I probably got it in here. We're probably right in here somewhere, right around this 379, 50-ish areas where I ended up grabbing it, and then went to VWAP. And then I ended up grabbing puts again. I just didn't want to buy the pops because they went up 75 basis points instead of, because I think the market was, I think initially was expecting 50. Then when it had the CPI numbers that I think the market started like anticipating it was going to be 75 basis points. So for some reason the market kind of liked it, and which was kind of puzzling, which it did the last time. It raised rates, it popped, and it dropped on Friday. But I wasn't going to really buy calls based on them raising it to 75 basis points with CPI being up so high and inflation's not really cooling down or even flattening for that rate. So I'm still kind of in the mode of shorting the pop. So any pop that comes up, I'll short it. So that's what I've been doing here. I shorted that one. Then when this one come up, I grab puts at like 314, which is right. What's 314? Grabbed it right here. 314. Yeah, I grabbed it here. Okay, so I grabbed it. I grabbed the 3740 here and caught this drop. And it popped back up. I grabbed it again. I grabbed the 3750 puts this time at 450, and they went from 450 to 610 in that little drop. And a good thing I got rid of it, because as soon as I got rid of it, it popped again, and I probably should have grabbed that, but I think I just said, okay, I've had enough for the day, and I was able to get the pops, short the pops. So we got this one pop, shorted that one, and got this little rebound right here, this retracement pop, and I got that one, and it popped into this, and I just, okay, I think I was done. So I wasn't going to trade anymore. I don't know if I did in my challenge account, but anyways, FOMC, very, very tricky to play. I've been playing them for many years, and I just get a good read on what happens, and you can't really anticipate what's going to happen, because SPY will, the market will just do what it wants. It doesn't care what you like or what you want. It shouldn't have gone up, but it did, and you just got to play that. So yeah, the next day, look at this. This whole thing, it lost all of its gains pre-market. So I guess the market realized, oh, wait a minute, I guess it's not good after all, which is what it did last time. So now on Friday, let's say, not Friday, sorry, Thursday, SPY puts under 370, which is right here. As you can see, it's kind of basing right here, kind of rounded up because it's technically like 369.90, and I didn't take it. I thought about it at the first opening candle, but I just kind of tried to stay with my my rule, just wait out the first 5 minutes and 10 minutes and grab it on the next. So I grabbed the 365 puts at 315, and they went from 315 to 446 on that little drop right there. So then I ended up grabbing them again at I grabbed SPX this time at 1115, which is right here. It comes down, comes back up to VWAP. I didn't want to grab it right here because I had a nice rejection, and I guess I could have gotten it down here underneath the 367.60-ish area, but too early in the day to be thinking calls, too early in the day to be, because if you got puts here, it could have squeezed in the call, it could have squeezed up, or if you got calls, it could have been a fake out. It's just too early in the day to kind of think of if it's going to pop or not. And, when it comes back down and quickly gets bought back up, I don't usually like buying calls like that. I mean, puts like that on a VWAP rejection, because it could squeeze. And I wasn't too comfortable grabbing calls either. So I just sat out, and then when it dropped, it came back and grabbed VWAP. And see, this is where the VWAP and 20 EMA came into play again. So I grabbed the SPX 3650 puts at $7.50 right here. They went from 750 to 11 in that drop. Then I bought them again at 1143, which is right right here in this candle. So I caught this drop, and it popped back up. I got this little retracement pop right here, because the 20 EMA and VWAP is still right here. So when you short here, you get like what? A $3.50 move right there. You gotta take that. You can't leave money like that on the table. If you had 10 contracts, that's $3,500. You're gonna leave $3,500 on the table. You shouldn't do that. So take it. Then if it pops back up, re-grab it again right there, because the VWAP and 20 EMA is still right there. That's why I reloaded it. I reloaded this time, same ones. Actually, no, I got the 3640 this time at 720. And they went from 720 to 720 to 770. Not much of a move. I think I probably got it closer to down here. than anywhere. So yeah. Then I grabbed, let's see, SPX puts again at 1201. 1201. No, this is where I grabbed it. Okay, so what I grabbed, 1143. Okay, okay. Got it here, caught this move. Then when it came back up here, this is where I grabbed it right here. I do remember this now because I grabbed it right down here because the first move was right here. Then when it popped back up, I grabbed it right down in here. Then it popped up on me. Then when it came back down, this is where I ended up selling it. And then when it popped back up, yeah, this is where I ended up selling it. But yeah, it popped back up. I grabbed it again at 1201 right here. I think it was right down in here. I'd have to actually, I'm not 100% certain, but I think that, if I remember correctly, I got it here. The first one was right here. Then I kind of chased this one down here because I remember that I got it and it went against me. And it went against me, then it came back down, then I actually took it. So yeah, then I reloaded again right here. Instead of buying it down here, I waited for it to get up here this time. And this time I got the 3650 puts at 740. So yeah, this one was a good clean play up there, and this one I bought down here too low. So when I was actually able to get out, I did get out and it popped back up. I decided to buy it up here this time instead of down here. I'm glad I did because it did the same thing and got to this area and then bounced again. So by buying it up here closer to VWAP, that I had a better move. Let me see. Actually, I think I got confused on. Let's see, what did I do here? I'm just going to look at the timestamps. Yeah, this 750 went to 11, and that was 720 went to 770, and 740 went to 1150 again. Yeah. Okay, this right here, this candle right in here, bought it up here, 740 to 1150. Yeah, that was a 3650 puts aside because I went from 3650 to 3640 to 3650 again. Then I switched to calls because every time I got to this area, it kept getting bounced, it kept bouncing, it kept getting bought. So I decided to take the chance. My calls at 1227, which is right here. I got the 3700 calls at 640 and yeah, 640, and it popped right here. Got it right here, I think. Yeah, I got it right here, and it popped a little bit. And the 3700 calls went from $6.40 to $8 in that little move right there. Then when it dropped back down, at 12.45. Yeah, right here. So when it dropped back down, I grabbed it back down here. I reloaded, and I got the 3700 calls again, but I got them at 6:30, and they went from 6:30 to 10:20 on that play right there. So yeah, I kept buying the top and shorting here and here. Then it started to not break down at this particular area, and it started looking like it was going to reverse. Then it started buying the dips and buying calls on the dips because bought the dip, pop, bought the dip, pop. Then at 12:45. Oh no, not 12:45. 12:52, I bought them again. So which was this candle right here. So when you look at this, 12:27. So I bought it here. Then I bought this dip. Yeah, I bought the dip pop. Yeah, so I got it here. Got the pop. Then I bought the dip. pop, pop. You know, did the same thing right here. I got the 3,700 calls at 12.52, which is right here. Bought the dip on the calls, and then went from 620 to 960. So as you can just see here, I'm going over and over. I'm kind of like rehashing everything. You can see that it's chopping based on the action as it's popping up. It's getting shut down, popped up, shut down. But yeah, it's not breaching lower day. It's holding this area. Then it popped back up. It came back down, and you know, it's getting bought. As you see, it pops, drops a little bit, and pops more, drops a little bit, and pops more. So you got to actually understand and look at the candles and the way it's moving. So that was why I switched from puts to calls right here, because of that. And I didn't take any more. I called it for the day, and I actually really thought it was going to pop hard right here because of you know, it's pushing up. I could say there's an inverted cup and a cup and handle right here, a cup and a little bit of a handle, and break right there, and I thought it was going to be a strong move, but no, I just ended up, SPY just can't get out of its own way. It's just not happening. And then on Friday was a very, very weird day. That's when we're having trouble with the options and stuff, with the level 2 not moving, and the time and sales printing differently, or being frozen completely. It was just a really, really, really crappy day. But it started out pretty good because it wasn't happening right away at open. It happened like 20 minutes, half an hour into the day. Now, Trade Ideas Room, Baba puts into 111, SPY puts into 364. Now I saw this, I was just like licking my chops over this. When you see Baba gap up huge like this, it was up over fluff news, something about Ant Group, and that China was letting Ant Group do something. You can never trust China. China will just put the hammer down on these Chinese stocks and Alibaba and stuff like that. You can never trust anything like that. It wasn't even really anything news. It's not like it just said that they had just proved something that Ant Group did, and it doesn't really mean that Baba was going to take off. And regardless, almost every single time that Baba gaps up really, really big, I almost said GABA for some reason. Baba gaps up really huge. It almost always sells off. And the only bad thing about Baba in the morning is that they take forever for the options to readjust and recalculate, and it was actually holding up here. It's when the time and sales started to come in, and I finally got filled. I got it at 117, and I was thinking 111 puts it first. So I said, no, if it does break this 111, it's probably going to go really, really fast. So I decided to go with 110, and I had it up and loaded before the market opened. So as soon as I saw the time and sales print, because that's what I look for especially with Baba, they take forever to recalculate and start printing time and sales. And even if time and sales prints, the spreads are really, really, really bad. So I watch the time and sales like a hawk on Baba at open every time I play it. And as soon as I see money printing through, I look at the spread. And at this point in time, they were printing at 80 cents, 60 cents. And I jumped in and I got in at 117. I really thought I chased it and I got it too high. Because when I was looking at it, 80 cents was coming up, 75, 60 cents I think was the low. And so I was like, oh, I think I just paid way too much. And so I grabbed it, hoped. Then after I grabbed it, everyone's like, how'd you get that price? How'd you get that price? And technically, I didn't think I had a good price. I think I had a bad price. So, I mean, I caught the spread. I should have waited just a little bit longer, but I'm glad I didn't, because that was ended up being a really good entry after all. But when I got in, I did not feel like it whatsoever. I kind of was like, I got way too high. And then by the time I posted on Twitter and looked over what the price was. It was like 170. I was like, oh wow, maybe I did get a good price. But yeah, it broke this area. Anytime Baba has a big gap up, I always watch it. That's always the top priority because almost always it sells off and it ends up selling off huge. So those puts went from 117 to 870. Some people in the room held it over six and they got over $6 and stuff like that. Good for them. So then I ended up going back to SPY. I'm not quite sure when SPY things started happening with SPY started having issues. Because I thought at first it was just tossed, because usually it's tossed, and but I looked at I looked at SPX on E-Trade, and I looked at other brokers, and it was not just one broker that was having problems. It was all brokers. It reminded me of GameStop, where the shenanigans were starting. So, but I grabbed SPY puts at 10:02, which is right here. Okay, as you can see, it popped back up, rejected pre-market highs, grabbed it right here. Grabbed the 367 puts at $2, and they went from $2 to $5. And I believe that shenanigans started happening right around here, right around towards lower day. I grabbed, yeah, because it was right around in here, because this was where it was happening, right in here. Now, I decided to grab SPX 3600 puts at 295. Now, there was so much crazy things happening. SPY was moving. Options weren't. Options were freezing. Options were delaying. Level 2 was showing one price and printing another. And then it wasn't that at one point, when it first started, that level 2 was skyrocketing. You could see it going up on the bid and ask, but yet nothing was coming through. You couldn't sell, you couldn't buy, nothing was happening. Then all of a sudden it would unfreeze, and level 2 would freeze, and time and sales would start coming through, and it was happening either or. It was either the level 2 was freezing and time and sales was printing, or it was the other way around. It was very, very mismatched. It was very crazy. So at first it was happening, because when it first started happening, I was checking all the other brokers to see if it was just toss, but it was E-Trade, Toss, Schwab. It was all the brokers that I was watching. So I knew it was not just one broker. It was all of them. And so when it started happening, this craziness was happening, that I was thinking, okay, the last time I seen this was GameStop, and the first thing I thought of was, okay, maybe we're going to end up having a crash. Maybe we're going to end up having some kind of like flash crash or something, because the market's freaking out. The time and sales and level 2's freaking out and not working correctly. So when it did finally work, when I was able to actually get something, I got the 3600 puts at 295. And then they went from 295 to 970. I think I ended up only selling for like 5 or something like that. I couldn't, get it really any higher because of it freezing, and it's hard to, thinking back, I think that what happened was that when I got in at the 295, it went to like $6, $7, $8. And I couldn't get anything to happen. Nothing was printing. I could see level 2 going up, but nothing was coming through on time and sales. Then when time and sales started to come through, I dumped it, and I sold it right around 5, I believe. Then after I sold it, then the market dropped even more, and that's when they went to 970. So yeah, when I had the chance to dump it and get out, I took it. So I didn't want to hold it any longer, because I didn't know how long this was going to happen. Then eventually, finally, after, I don't know, when did it start? Like at what, 10:20? We'll say 10:15. I mean, it lasted for almost a half an hour. It was crazy. Twitter was going crazy. The room was going crazy. So, yeah. Then I bought puts at what, 11:14, which is right here. 11:14. Right here with the VWAP. And 20 EMA, I got it right there. I got the 3620 puts at 570. They went from 570 to 640 in that little drop right there. You can look at how much it went away from the price. See how far it went away from VWAP and 20 EMA, and as soon as it got up to it, it rejected it. So got to the VWAP, rejected it, got that little pullback, 570 to, what was it, 640. Not that great of a move, but pop back up. And 1135, I got puts again, 1135, which is right in here. I got it probably right through VWAP. I think I ignored this move and it popped back up. I grabbed it. I grabbed the 3600 puts this time at 720, and it went from 720 to 1150 right here. So as you can see, it rejected the VWAP a little bit. It came back up, rejected PDC, which is previous day's close, which is the white line. This line rejected it, came back down, rejected it. So when it came back down, that's where I grabbed it, and we got that little dump right there. Then I switched to calls at 224. 224. Right here. Now what I was looking at with this particular time, inverted head and shoulders. You get the left, the head, then you get the right shoulder. So I was thinking, okay, it's quad witching, OPEX. We had a dump for the week for FOMC. What better way to squeeze into close? And so I grabbed the 3720 calls at 480. And then went from 480 to 550, and that little push right there. Which way push? Yeah, right here. That little push right there. Then when it came back down, I took puts at what, 345. 345 right here. Yeah, right here. Okay, because I was anticipating a breakout right here, and I got that. I got out. It dropped back down. I don't know why I didn't grab it right here. I didn't grab it right there. I kind of should have. Then when it popped back up and came back down, I did grab it this time. I grabbed the 3680 puts at 345, which is this little candle right here, and it dropped. So it went from, I got up 460, went from 460 to 360. So I got a $3 move out of that. So you got to take those moves, especially at the end of the day, because it can reverse like in a flash. I mean, look at this, dumped and it just ripped like within a few minutes. So end of the day, on expiration day, it can be very, very tricky and very, very fast. So you got to be ready for it. And if you don't want to take the loss, or you don't want to take the risk, then just don't trade the end of the day, because that is the riskiest of them all. That is why I should emphasize, try not to take him on the challenge account, because I think the last time I took him on the challenge account, I took a hit, and just stay away from it because it's too unpredictable and too crazy, and I just try to stay away from it as much as possible. Even though you sit there and you watch these plays, when you can get them, they'll end up going from like $4 to $30 in one candle, and you're just like, wow, I just wish I could grab that play. But those plays are like almost next to impossible to grab, because they just like to bait and hook people. You know, they make it look like it's going to go one way and rip it the other way. So it's very, very hard to anticipate. And even when they don't like do a bait and switch, that they actually do, it starts to drop. It does drop a lot further. So it's really, really hard to anticipate the last move of the day. It could go straight up, it could go straight down, it could do a nice huge fake out and rip in the opposite direction. So it's just very, very, very risky to take the last 10-minute play. But it's also the best play for the best risk reward. So that's just my opinion. So this is not financial advice, never is, never will be. This is just my journey. And if you take any of the plays that I talk about or future plays, then you're going to take them at your own discretion with a grain of salt, because it's my journey and I'm just sharing it. So with that said, that's going to do it for the recap, and hope to see you in the room, and thank you for watching.